Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is September 19 and we're starting from euro-dollar pair with Jakub Novak as usual. The empty macroeconomic calendar as well as the statements of the ECB representatives did not support euro yesterday, although a slight upward correction occurred, which may continue today. A downward revision in the Eurozone's consumer price index will partially recover demand for euro, while an increase in inflation will resume the decline. Data on the ECB's current account balance will likely go unnoticed by traders. For long positions, buy euro when the quote hits 1.0688. And take profit at the price of 1.0734. Growth will occur as a part of an upward correction. However, when buying, ensure that the MACD line is above zero, or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0669. But the MACD line should be in an oversold area, as only by that will the market reverse to 1.0688 and 1.0734. For short positions, sell euro when the quote reaches 1.0669. And take profit at the price of 1.0625. Pressure may return at any moment, especially before the Fed meeting. However, when selling, make sure that the MACD line is below zero, or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0688. But the MACD line should be in the overbought area, as only by that will the market reverse to 1.0669 and 1.0625. The next stage of our review is the next major, pound sterling dollar pair, presented by Petar Yukimowicz. GBP USD has been trading sideways at the price of 1.2376. But Petar sees potential for the downside breakout of the consolidation. Due to the breakout of the bigger base in the background and potential for the downside continuation, Petar sees further downside movement towards lower references. Downside objective is set at the price of 1.2310. RSI oscillator is showing bearish divergence. Which is a good sign for the potential downside movement. Key resistance is set at the price of 1.2410. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tapas. Early in the European session, gold is trading around 1933 at 61.8% Fibonacci, as a result of the high of 1953 and the low of 1900. We can see that gold is showing signs of exhaustion, and gold is likely to consolidate in the coming days until the market receives the news from the Federal Reserve. The market consensus is that the United States interest rate remains at 5.5%, so significant changes are expected. If the data remains within the forecast, we could expect the dollar to strengthening, and this could weaken gold, so that it could fall towards support levels of 1921, 200 EMA. According to the H1 chart, we can see that gold is trading within an uptrend channel formed since September 14 and is now showing signs of being overbought. In the next few hours, a technical correction is expected to occur only if the gold pair trades below 61.8% Fibonacci or below 4.8 Muri. In case of a bearish scenario for the next few hours, we could wait for a signal to sell below 1937 or around 1933, with targets at 1926 and 1921. On the other hand, in case a pullback occurs towards 4.8 Muri, this could be seen as an opportunity to sell with targets at 1921, and the price could even fall towards 2.8 Muri level located at 1906. The Eagle indicator is therefore given a signal of extreme overbought conditions. The key will be to watch if a bullish move occurs and gold trades below 1937. Then it could be seen as a negative signal and an opportunity to sell. What about exotic major NZD-USD currency pair? Area of Mockmore describes. Even though on the 4-hour chart the NZD commodity currency pair appears to be moving in a sideways condition. It's a blue box on the graphic. Where this is confirmed by the WMA20, which moves between the candle bodies. But sellers are still trying to dominate the kiwi. This can be seen by the CCI indicator, which managed to penetrate below the three main levels, 100, 0 and -100. Where in the near future NZD will try to test the level below its current price, namely level 0.5876. If this level is successfully broken, and as long as there is no upward correction that exceeds level 0.5930, then NZD-USD will continue its decline to the level of 0.5855. And finally, here's Laurie Bailey with AUD-USD pair forecast. Let's have a look. The USD-JPY pair has paused at the embedded blue channel's price line and has stayed near this area for the third day. A similar situation with a 3-day consolidation in front of this line occurred on the September 6-8. At that time, the result of the consolidation was a fall to the 145.90. Now, in case the Federal Reserve eases its monetary policy or announces a plan for rate cuts at the FOMC meeting, the price may fall further in the long run. The primary target is 146.42, the MACD line, then 145.90, and then 144.73. The divergence between the price and the Marlin oscillator tells us about the advantage of the bearish scenario. However, if the price surpasses Friday's high 147.96, it may reach 148.50. And beyond that target level is 150.00. On the 4-hour chart, we have an uptrend. The price is progressing above the balance and MACD indicator lines, and the Marlin oscillator shows that is rising in the bullish territory. We await the announcement of the results of the Fed meeting on Wednesday. That's all for today. See you online soon, and good luck.